Dr. Chandranath, welcome to Advocata Studio. Thank you very much for joining the conversation today.
Thank you very much for inviting. It's a pleasure to be here.
Thank you. So, Dr. Chandranath is the Assistant Governor of the Central Bank of Sri Lanka, and he has done a lot of work on economic recovery, and he has represented the Central Bank of Sri Lanka in the IMF as well, and he have done many assignments, leading many departments at the central bank. If you have been referring most of the central bank reports, which was produced by the Economic Research Division, and that was the work by the team at the central bank led by Dr. Amarasekara, and most of the media, journalists, academics, researchers, research institutes like us depend on the data that has been compiled by his team. We are very grateful. Thank you very much. Just to get things started, what is, I think people's question is, what is the status of the economy? And if you go to any conversation, conference, they ask like, is it stable, or do we have to worry about anything? Or can we celebrate, or do we have to be cautious? From the point of view of the central bank, can you give us a status update on what's the status of the economy?
Absolutely, Chandranath. So we are recovering from a very, very deep crisis. And in 2022, we recorded a contraction of 7.3% in real terms in the economy. And in 23, the contraction was 2.3%. But by the second half of 2023, the economy started recovering. And inflation, as you know, shot up to 70% in September 2022. But within 10 months of that peak, we were able to bring it down to single digits. So by July 2023, inflation was back to single digits. And at the moment, we are going through a temporary period of deflation. We believe that next month or so, inflation will come back. And by the second quarter of next year, we'll get back to the inflation target of 5%. Usually, deflation is a concern because that could affect growth. But in Sri Lanka, that is not the case because we have seen growth at 5% in 2024. And even in the first couple of quarters in 2025, growth seems to be quite good. So we think that growth this year could be between 4 to 5%. Inflation is under control. And the balance of payment conditions are also much better than where they were 2 years ago. We had no usable reserves at the peak of the crisis, but now our reserves are above $6 billion. And the exchange rate, it depreciated sharply in 2022, but since then it has appreciated by 12% in 23, by about 11% in 24, and there is a mild depreciation of about 2.5% thus far this year. If you look at the other sectors of the economy, for example, fiscal sector, we see improvements. The budget deficit is down. There is a primary surplus compared to a very large primary deficit a couple of years ago. Revenues are up. Revenues were at very low levels in 2020, 2021, 2022. They were one of the lowest. Sri Lanka's revenue to GDP ratio was one of the lowest in the world. We were in the bottom 10. There were only about 8 or 9 countries below us in terms of average revenue, government revenue to GDP ratios, if you look at the world statistics. But now revenue is up to 13.5% of GDP. That was in 24, and we expect revenue to increase to 15% by this year. And so, we are doing well. The economy is stable compared to where we were, but are we out of the woods? Not really, no. There is a lot to be done. So if you think of the economy, if you think of economic growth, I think we need to maintain the momentum. There's a lot to be done. We are under an IMF program, but it's not enough if the country is to grow in the next several years at a reasonable rate. And there cannot be we cannot go back to the past. So there cannot be policy reversals, and that is we are confident about what's going on in the economy at the moment, but there is a lot of challenges. So globally, there are so many uncertainties, as you know, but domestically also we also have to tread very, very carefully. That's where we are.
No, so Dr. Amarasekaran, from what I gathered, so if I understood what you said right, what you say is economy is stable, but if we were to worry about something, is it the growth that do we have to worry about, and making sure that we are not reversing some of the policies is what we have to keep a eye on. So if, for an example, if a business person wants to know whether we are on the right track, if he sees that economy is growing and if we are not reversing some of the policies, is it an indication that we are still not out of the woods, but at least is it a way to think that we are in the right direction, or do they have to think about any other indicators like maybe the inflation or the reserve level or the exchange rate? Or how do you, for someone who really do not have a in-depth understanding of the economy, what do they have to think about or to make sure that okay, it's in the right direction?
I think you summarized it very well, Dhananath. So the economy is recovering. It is stable, but there cannot be policy reversals. We do not have that benefit. We may have had that benefit in the past, but not anymore. Not anymore. Growth is always a concern. I mean, it has been a historical concern because in the past, what we have done is that we've provided to the economy temporary, short-term monetary and fiscal stimulus. But of course, that kind of stimulus cannot drive long-term growth. So we need a long-term growth strategy. And of course, we see elements of that. For example, addressing corruption vulnerabilities that would definitely address growth. And also, that would improve the doing business environment in Sri Lanka. But at the same time, the population is aging and there are so many global challenges, as I said before as well. So we need to be very, very careful with regard to our growth strategy. And the government in particular will have to address those concerns going forward.
Thank you, Dr. Amarasekaran. Now let's come to the IMF program, the 17th IMF program. What is the progress? What we heard on news and on media was Dr. Geeta Gopinath visited Sri Lanka, and it seems that they're taking Sri Lanka sort of as a success story on the incredible recovery that we have gone through. What is the actual status? And if you I'm what we see is every 6 months there's a review and there are recommendations being given, there's a report being released, and they say what has been done, what hasn't been done, and sometimes there are delays to get the director level approval. Those are the little things
Right.
that an outsider would see, but in real terms, how far have we moved forward, and are there any risk factors that we may derail from the IMF program, or anything that citizens should know about the IMF program?
Sure. So I think as Sri Lankans, we should be proud that the IMF program is working very well. So essentially, I think there was a lot of skeptics at the beginning, and of course, skeptics would be there always.
Always.
But I don't think anyone thought that Sri Lanka would come to this stage. Sri Lanka would recover this fast from that deep crisis we were talking about at the beginning. The IMF program was approved in March 2023 by the IMF Executive Board. The initial letter to the IMF seeking a financing facility went to the fund in March 2022. And the current governor, Dr. Nandala Veerasinghe, came to the fund in April 2022 and started negotiations. And these are $3 billion facility, and as you said, there are 8 reviews and 9 disbursements. A disbursement at the beginning, and thus far we have completed 4 reviews. So essentially, what is meant by a review is that there are targets set, agreed at the beginning of each year. At each review, we agree on targets for a couple of reviews. And then the IMF staff, they come here, they monitor the progress of those targets, our progress against those targets. And of course, this monitoring happens on a day-to-day basis as well. And from our side also, we monitor our progress on a day-to-day basis. And then we try to achieve those targets, and there are several structural benchmarks also set. And at each review, this progress is reported to the IMF executive board by the staff of the IMF. So initially, there is what is called a staff level agreement. And from there onwards, if by any chance there are, a few things that are remaining to be done, they will be called prior actions. And once the prior actions are met, our case will be taken to the IMF board, and they can either approve or not approve. And once the approval is given, the disbursement is done. So thus far, out of the $3 billion, we have got about $1.75 billion. 4 reviews are completed, 4 reviews to go. So in other words, we are right in the middle of the IMF program. And this is supposed to continue till, if I'm not mistaken, March 2027.
So I'll take the side of the skeptics or the critics play the role of the devil's advocate for a second. Now, one main criticism or concern that people always raised is, okay, this IMF program, they put the conditions and there's no negotiation power at all for the Sri Lankans, and generally it's the Minister of Finance, the Treasury Secretary and the Central Bank basically participate in these negotiations and conversations. I think there's no one better than you to ask this question, because you have been in both sides.
Yes.
You have represented the IMF so as the Central Bank of Sri Lanka. Actually, can you explain how does it happen? Actually, do they come with a cane and say, like, do this, or how does this negotiation process happen? Actually, do they listen to us, or whether it is like we are just doing what they are saying?
Thank you, Dhananath. That's my favorite question. So essentially, the IMF comprises of more than 190 member countries. We are also one member country. Think of it as a global bank. It's actually the global lender of last resort. We call it the global lender of last resort. When no one else is lending to us, when no one else is lending to a particular country, this is where they have to go. So it's a given. There are some other options as well, but they are not as popular as going to the IMF. So think of it as walking into a bank and asking for a loan. There will be conditions that cannot be avoided. But think of the conditions that they are imposing. If you look at the Sri Lankan program, they told us reduce inflation. They told us increase government revenues. They told us reduce the budget deficit. They told us build up international reserves. They told us streamline your social safety net program. They told us introduce formula-based monthly fuel adjustments. They told us do electricity tariff revisions regularly. They told us introduce the Anti-Corruption Act. they told us, stop printing money and make the central bank independent. They told us, introduce a Public Financial Management Act. They told us, introduce Banking Act amendments so that the banking sector will be strengthened. So when you listen to this list, only then you realize that these are the things that we should have done, but we did not do. So unfortunately, during the crisis, we lost our credibility totally. And somebody else from out of Sri Lanka had to come and tell us, ask us to do this. And that was the sad situation we were in. And these are actually commonsensical reforms that we should have done. I'll take just a couple of examples. Sure. Formula-based fuel price adjustments. Globally, I mean, we are a petroleum importing country. And how can a government or a politician decide on domestic prices on petroleum when we are totally dependent on the imported fuel? So obviously, domestic fuel prices will have to be in line with global prices. And if that's not happening, then either the relevant state-owned enterprises will make losses, or that will either be passed on to the government or the banking sector. Same with the electricity price revisions. So from 2014 to 2022, if I'm not mistaken, we haven't changed our electricity prices even by a cent. We are dependent on imported fuel, whether it's oil, coal, or anything else, and also we are dependent on rainfall, on generating electricity. How can a country not change electricity tariffs domestically for 8 years when all those things, all those changes are happening around the world and in Sri Lanka? So that's why I said those are commonsensical reforms. We should have done those. We did not do those. And ultimately, we had to listen to the IMF. You were talking about the cane, but
yeah. Also, just want to understand now, with the IMF, there's a staff level agreement. At the same time, we did a report called a governance diagnostic report. And if I remember right, there was about 100 odd recommendations. I think there were about 16 to 17 priority recommendations. So what is the combination or connection of the IMF agreement and the governance diagnostic report? Do we have to do all what is recommended at the governance diagnostic report, or whether it is like optional, or whether the tranches are being, or at the review, this governance diagnostic report is also considered, or is it like a report that with a list of recommendations that whether you can do it or whether you can avoid it, or like it's whether you do it the way that you want, or whether are there certain conditions being taken from the governance report to the IMF, like the staff report? Can you connect the two?
Sure.
What is the role of these two reports, or is it a one report that we don't see it as like whether we see it as two reports?
Of course. So in Sri Lanka, I think the IMF recognized corruption vulnerabilities and governance issues as macro critical. Not only the IMF, I think many within the country as well as outside, they would consider Sri Lanka's corruption vulnerabilities and governance issues as macro critical. I mean, it affects the performance of the macroeconomy. So the Sri Lankan government at that time, they invited the IMF to carry out a governance diagnostic exercise for Sri Lanka, and that was carried out. And as you said, they came up with 16 priority recommendations, and that report is published. That was one of the conditions of the IMF program. That report was published, and the recommendations of the report are now being implemented. For example, operationalization of the Anti-Corruption Commission. From time to time, when we try to reach the staff level agreements, we agree with the IMF to incorporate some of those recommendations into the program as structural benchmarks, and that's what's going on.
Got it. Also, in terms of now this 3 billion, approximately about $3 billion of IMF fund facility, could you also indicate what is the time period that we have to pay it back, and are there any interest that we have to pay? Like, how does it work? And is the interest rate varies from country to country? In that case, like under what conditions that it would change? Could you give some indication on that as well, please?
Sure. So, I mean, the IMF lending is based on something called the quota. So each country has a quota that they could access, and Sri Lanka's program is based on the Sri Lankan quota, and we have borrowed for this program 395% of the quota. So it's not exceptional financing, but when the amount outstanding that a country has borrowed from the IMF increases, then of course the interest rate will increase. This is linked to the global interest rates, it changes from time to time.
Right.
And but I think what we have to understand is that whether it's borrowing from the IMF, World Bank, or Asian Development Bank, these do not happen at commercial rates. They are more concessional than if you borrow from the commercial market.
Got it. And now, in terms of the commitments, Dr. Amarasekara, what is pending? Of course, generally there's a list comes out, and what we see is also it's sometimes depending on the progress, you adjust it, you push it maybe for the next term, or
Yes.
there are changes being taken place. But are there anything that is like non-negotiable that you really have to do it on this particular time frame, and or is it like there are two tracks where there are certain things that you non-negotiable and there are certain things that you can always negotiate? How does the conditions work? And in terms of what we assume is that since we have now in the middle of the program, we have met the conditions and IMF basically do a statement on our progress. Do you worry on, I mean, the future, some of the commitments, whether how hard it is, or whether it is becoming, if the program is becoming harder and harder towards the latter part? And also there was a conversation that we haven't really completed some of the IMF programs. How do you bring all these together, whether we will continue it or whether we will go out from it, or if it's controversial, don't answer, but how do you see it basically in terms of the conditions and our ability to continue with the program?
Of course, we are always worried. That's what central bankers do. We worry about almost everything. The IMF program, as I said before, is subject to 8 reviews. So every 6 months, on average, we get an opportunity to look at the targets and the benchmarks, and agree and disagree with the IMF. And if changes need to happen, we can always negotiate. So that option is there every 6 months, that those negotiations are happening. But there are a few things that we cannot change. For example, the primary surplus. So it was agreed at the very beginning that Sri Lanka has to generate primary surpluses of at least 2.3% of GDP, and I don't think we need to negotiate on things like that. And an inflation target of around 5% within a certain band that has been agreed at the beginning. So that will continue, and so on. We try to stick to the original program, but if changes are needed, of course, I mean, those can be done. And also, I mean, when you set new structural benchmarks or targets for the next year, for the next couple of reviews, then we look at what actually has gone, I mean, right or wrong, and then we change course. There is space for adjustments like that. For example, I mean, we didn't expect growth to be this high in 2024. and this year. So when the IMF first structured the program, I think they had very low growth rates for Sri Lanka, 1.5%, 2%, and so on. But that's not what was realized. We had 5% growth last year and so on. So with those, of course, the ratios will also change. I mean, higher growth would mean that the for example, government revenue in terms of rupees billion compared to the revenue to GDP ratios that were agreed could be different. So those adjustments, of course, take place.
I want to quickly go back to a part of the previous question. Since you represented Sri Lanka at the IMF board, could you also give a quick overview of what's the role? Because I remember there was one in a way a criticism for the current governor saying that, okay, you have represented the IMF and now you are also being the governor of the central bank, and like you are supporting the IMF side sort of a sentiment. But I think it may be important that you clarify
Sure.
what is the role. I mean, why a representative from Sri Lanka is be in the board of the IMF? What is happening? Can you shed some light on the process and the protocol?
So when you are the alternate executive director or the alternate executive director of the IMF, you represent your constituency. So even now, I mean, we've had the executive directors of the IMF visiting Sri Lanka. They actually represent us. I mean, I was on the board and I represented the interests of Sri Lanka. So current governor also did the same. Mr. Mahinda Sirivardana also did the same. So so we as alternate executive directors for Sri Lanka at the IMF represent Sri Lanka. It is, I mean, we are the voice of Sri Lanka at the IMF board, and it's all about common sense economics as well. So all of us, I mean, the IMF staff and the IMF executive board members, as well as many central banks, we've been to similar universities and we have similar backgrounds. So this is all about common sense economics. And of course, I mean, serving on the IMF board also helps us to negotiate better with the IMF whenever there is a IMF staff visit.
I just wanted to also understand, you can skip this question if you really cannot recollect the data. If I remember right, during the COVID time, there was a conversation, let's go to IMF. If I remember right, actually we requested, but IMF response was slow, is I vaguely remember what I read. And even I have read, even during, at the height of the war, that we reached out to IMF, but they were basically dragging their feet. And then India has to give a little bit of support for us to, connect with IMF.
Sure.
Is there any truth to it? Or actually what happened, whether did we reach out or whether it was like too rushed, because with COVID, everyone was going to IMF. So there was like a line of countries who needs IMF support. Can you shed some light on what happened, especially during COVID time, but if you recall also during at the height of the war, whether did we had to get India support? Because I remember, I think you were at the table at the very first time when we went to the IMF, like the negotiation, I think
Yes.
in Washington.
Yes.
And even people said like, why the Indian finance minister seated on the same table? Could you also clarify clear the dust on these three issues?
Sure. The IMF introduced some emergency financing facilities during COVID, and there was some interest. And if you remember, Chandranath, we were with the IMF under a program just before COVID hit as well. That program was discontinued. At the same time, there were some discussions on accessing these new facilities that the IMF introduced during COVID. But I can say this now: we were only involved in the technical discussions, but the letters were sent and so on. But the discussions, I mean, once this IMF sort of view that Sri Lanka's debt was unsustainable was communicated to the Sri Lankan authorities at that time, that was the end of the negotiations, discussions with the IMF. So I mean, we had to wait for, I think, almost 2 more years to write to the IMF asking for their assistance at the height of the crisis. India's role. So India was extremely helpful. We should be very grateful to India because you start negotiations with the IMF. As I said, as we discussed at the very beginning, this was a very deep economic crisis. A lot happening in Sri Lanka as well. People were going through a really tough time. And we knew for a fact that the negotiations with the IMF will take quite a long time. What do you do till then? What do you do till the end of the negotiations? And how do we survive? I mean, no reserves, absolutely no usable reserves. And people were in long queues and so on. So the Indian government came to our rescue at that time, and they provided credit lines to Sri Lanka so that we could survive until the IMF assistance actually came. That's exactly what happened.
The role. Thank you very much. With that, let's move one of the critical reforms that you even mentioned coming from with the IMF program, that is the central bank and the independence of the central bank. I just wanted to understand first. I think there were 2 boards which was recommended, and you have been at the central bank before the pre-reforms and after reforms. How do you evaluate, with your experience working with many other governors and with your colleagues around many other central banks, reserve banks? How do you see before reform, after reform?
So the Monetary Law Act that was in place before the new Central Bank Act, that was a fantastic piece of legislation, but that was drafted in late 1940s. The world has evolved quite a lot, and central banking had also evolved. So many changes were needed, and in particular, we felt that central bank independence was not enshrined in the Act, in the sense that from person to person, how the Monetary Law Act would be implemented could be different. So recognizing this, in 2018-19, we started drafting a new Central Bank Act under Dr. Indrajit Kumaraswamy, and Dr. Nandalal Veerasinghe was the Senior Deputy Governor. He played a critical role in drafting. And that was drafted, the bill was prepared. It was submitted to the Parliament in 2019, but nothing happened. And with some more revisions, we actually implemented it in 2023. So I strongly feel that if by any chance that new Central Bank Act was there in 2019, if that was enacted in 2019, we wouldn't have faced the crisis that we faced in 2022, because so many things went wrong during that period. During Dr. Kumaraswamy's time, there was a board decision that we should not finance the government. That was reversed in 2020. We actually, when the initial requests were made to the central bank, so I strongly believe that if the Central Bank Act, the new Central Bank Act, was in place in by the end of 2019, the crisis that we faced in 2020, 21, 22 would have been milder. Of course, the global shocks were there, but the policy errors, the space for policy errors would have been much lower. So, with the new Central Bank Act, so many things have changed. So, one key change is that there is no representation of the government on the central bank boards. So, earlier in the Monetary Board, under the Monetary Law Act, the Secretary to the Treasury was a member, and he could influence the monetary policy decisions. So, the person who is responsible for fiscal policy of the country, the key official responsible for fiscal policy of the country, has a role in monetary policy decision making as well. That was not a global best practice, so that had to be changed. And also money printing. So there were provisions that enabled the central bank to print money at the request of the government. So you can interpret it in different ways, but in reality that possibility was there. That had to be stopped, and under the new Central Bank Act, that has been stopped. So there is no government representation on the central bank boards. Money printing is no longer valid, and inflation targeting framework is set, and exchange rate is flexible, and so on. So many changes under the new Central Bank Act, and I believe that this is for the betterment of the country.
Could you also quickly comment on the independence versus accountability? This was a question that has been discussed multiple times. But since now we have been about 1.5 years, 2 years under the new Act,
2 years.
2 years, how do you feel in terms of comparing with accountability and independence? Do you feel, since you have experience, because you can, only very few people can compare and contrast, how do you see the accountability aspect and the independence aspect pre versus post?
Absolutely. So independence, central bank, I mean, if the central bank is expected to deliver on its mandates. So right now the mandate is the core objective is ensuring price stability, and the secondary objective, the other objective, is to ensure financial system stability. If a central bank is to deliver on those mandates, independence has to be given to the central bank. So that's what happened under this new act. But at the same time, I think there is giving only independence will not work, because institutions have to be responsible to someone. In our case, to the general public and the parliament. So we had to. So on the one hand, we had to sort of prevent fiscal dominance of monetary policy, but at the same time, we were made accountable to the public and the parliament, and the transparency provisions also helped in increasing or improving accountability. So essentially, if there are deviations from the inflation target, then we have to submit reports to the parliament and publish them as well. That provision was not there in the past. In the past, we would send confidential reports to the government. No one in Sri Lanka would know about those. No one in Sri Lanka would even know whether we have submitted those or not. So now the situation is different. We have to publish the monetary policy reports, which we are doing now. We have to publish reports on financial stability. We have to publish an annual economic review as well. And several provisions that ensure transparency, which would ensure accountability, and of course help us in maintaining our independence as well.
Also now, let's move to the monetary policy and inflation,
Yes.
which you have also been a part of for a long time. So main question by any conversation by the public, you are saying it's inflation is coming down or deflation. Why the prices doesn't reflect the inflation numbers. I'm sure you may have answered this multiple times at the central bank press conference.
So, what's happening now, as I said before, is we are in a temporary period of deflation. When there is inflation, that does not mean that prices are coming down. That means that compared to the same period last year, prices have gone up when there is inflation. When inflation is low, that means prices are going up, but going up at a slower rate. So it is a natural tendency for oil prices to go up over a period of time. So inflation is a natural phenomenon. So as I said before, we are in a temporary period of deflation, and during periods of deflation, actually, compared to a previous period, a year ago, prices are coming down. So right now we see this deflation decelerating. So it was deflation of 0.6% a month ago. Now it has come down to 0.3%. So we've come here from a very high level of inflation, 70% inflation in September 2022. So that meant that prices compared to the previous year went up in September 2022 by 70%. So since then, inflation has decelerated, and we've come to a point where there is a mild reduction in prices. But when I say prices, it's a basket of goods and services. It's not just one price of one good or one service. We are referring to it through a basket of goods and services. And inflation is measured by the Department of Census and Statistics through two consumption baskets. One is the Colombo Consumer Price Index, and the other one is the National Consumer Price Index. And we are seeing the National Consumer Price Index based inflation moving to positive territory in recent months. And we expect CCPI-based inflation also to move to a positive territory in the next couple of months. But inflation does not mean that prices are coming down. It's the rate of increase in prices coming down. That is meant by inflation. But let me also, now that we are talking about inflation, let's talk about a counterfactual as well.
Before that, Dr.
Yes.
Amarasekar, I think for our viewers, he mentioned something very important, because most of the time when the word inflation mentioned, everyone looks at the central bank, but actually the inflation is calculated by the Department of Census and Statistics. If you go to their website, the prices, weekly prices of vegetables or most of the household daily consumables are measured. So when you say inflation, while through the monetary policy, it's discussed that what's the role of the central bank on inflation, but actually these numbers are not calculated by the central bank. Absolutely. It was the Department of Census and Statistics. So on the calculation, I will ask him, but it is mainly done by the Department of Census and Statistics. Sorry, I interrupted after your explanation.
That's fine. Yeah,
you were speaking about a
counterfactual.
Counterfactual.
Yes. So in September 2022, as we discussed, inflation was at 70%. But imagine a scenario where there was no central bank action, there was central bank inaction, or the central bank did not take measures to arrest this increase in inflation. So we would have moved to a hyperinflation episode if by any chance that happened. So, I mean, if by any chance that high level of inflation continued, or we were in a hyperinflation scenario, that would actually mean cost of living would have continued to go up massively. For example, when you look at the IMF data available with the World Economic Outlook, out of the 190 countries. I think if you take the period from 1980 to 2000 thus far, there have been 60 countries with inflation rates of 50% for at least 1 year. And out of those, I think only 12 countries have been able to bring inflation down to single digits within 1 year. In most of the other countries, inflation at higher rates, at accelerating rates, they have continued. The best examples are Venezuela and Zimbabwe. In Venezuela, inflation rate was 130,000%. And I think, if I'm not mistaken, in Zimbabwe, at one point, inflation rate was 79.6 million%. Again, please excuse me if my numbers are wrong, but this is what I remember. So imagine a situation in Sri Lanka, where would we have been if that kind of inflation was present? But luckily, I think the right decisions were made in 2022. Policy rates were doubled in April 2022, and of course, I mean, several other adjustments were made, and those actually helped arrest this rising inflation. And within 10 months of that peak of 70%, we were able to bring down inflation to single-digit levels. But with this 70% inflation, of course, cost of living went up. So the prices that we are facing today are much higher than the prices that we faced in before this high inflation episode. Will they ever come down drastically? I do not think so. So what should happen is gradually, when the economy expands, when the economy recovers, the income levels should gradually go up, and I think that's I think the entire country is waiting for that process to happen.
Also, very quickly, I know this is not your forte, but just for our viewers' understanding, now when since you mentioned inflation is calculated on a basket of goods, that basket, I mean, what are the components of that basket? Is it available from the census and statistics? And at the same time, also, could you kindly very briefly mention why there are two inflation indexes, Colombo Consumer Price Index and the National Consumer Price Index, for our viewers, because I know a lot of university students, sometimes young graduates, are watching these programs for their education purposes.
Sure.
And what's the application at a national level? Sometimes they know how to calculate the inflation numbers.
Sure.
What is the implication of at a national level? How do you make decisions between those two indicators, if you have a thought process on that?
Of course. So the Department of Census and Statistics website is very comprehensive, and they provide quite a lot of information on these two baskets, the Colombo basket as well as the national basket. And the weights are also, the information on weights are also given. So essentially, in the Colombo Consumer Price Index, the weight on food is lower compared to the National Consumer Price Index, and the weight on energy consumption is higher compared to the National Consumer Price Index. So these are based on the household income and expenditure surveys that the Department of Census and Statistics conduct from time to time. They change the weights. They change the basket based on the changing consumer patterns of the representative agent.
Got it. Thank you, Dr. Amarsekara. Now I also would like to move on this single policy rate. What is it? I mean, what was the difference before the single policy rate versus after the single policy rate? What is the policy rate? What I think people see is the monetary board convenes and they say the interest rate goes up or goes down or it remains the same by a few basis points. Could you elaborate on this matter on the single policy rate and what people should know about it?
Of course, Chandranath. Let me start with the inflation target. So we have an inflation target of 5%, and the central bank has been given independence to ensure that inflation in the medium term is maintained at this inflation target of 5%. And the main tool that we use to achieve this target is the policy interest rate. So essentially, through the policy interest rate, we can control all the interest rates in the economy, and through that we can do so many things. One is we can influence the credit flows. We can influence what's happening with the external sector as well, and also we can influence the inflation expectations as well. So if we tighten, if we raise policy interest rates today, that would mean that we are signaling to the economy that the economy is overheating, and we would like credit to contract. We would like economic activities to slow down, and that could that by itself could have an impact on inflation expectations as well. So to manage inflation around the target, we use the policy rate. Now we have a single policy rate, whereas in the past we depended on two policy interest rates. One was the standing deposit facility rate and the standing lending facility rate. So that those two rates, they created a corridor for interbank market to operate in. Those two rates are still there, but in the past we used to announce those two rates. So people, the financial institutions, people outside, they did not know where we are targeting short-term interest rates. They could be at the bottom of that corridor at the standing deposit facility rate, or they could be at the top of the corridor at the standing lending facility rate. Where should we be? I mean, that's we had that discretion as the Monetary Policy Board makes the decision on the policy interest rate, but the central bank officials had the discretion to manage the daily interest rate within this corridor. But after moving to the single policy rate, we now try to manage the short-term market interest rates at around the overnight policy rate. So signals are clear. We only announce this single rate to the market, and then the market would expect the short-term rate to be around that rate, rather than worrying about whether it should be close to the deposit rate or the lending rate.
Did I understand it right? So that means that there'll be no corridor with the single policy rate.
The corridor is there.
Is there.
Yes.
Without.
Correct.
Yes, correct.
So in addition to the corridor, we have the overnight policy rate, but we do not consider those two rates, the SDFR and SLFR, as policy interest rates.
Got it. Now, also, when it comes to the exchange rate and reserves, like what's the current operating mechanism of determining exchange rate? Because sometimes people say, okay, it should have been appreciated, it should have been depreciated. Someone says the central bank is manipulating, you are keeping it artificially, at a constant level, the exchange rate. Actually, what's the framework that the central bank is using? Also on the reserves, because people were concerned about, we'll come to that part in the next question, next round, final round, on when you allow vehicle imports, you are importing from reserves. All sorts of ideas and perceptions are there.
Sure.
Let's start with the exchange rate and the reserves. Yes,
of course. So the Central Bank Act is very clear now. We have to operate within a flexible exchange rate regime, which should be in line with the flexible inflation targeting framework. So that clarity was not there in the previous act. What does this flexible exchange rate mean? So essentially, we allow the exchange rate to move in response to demand and supply conditions in the market. So obviously, I mean, if there are higher inflows than outflows, the exchange rate will appreciate, and vice versa. At the same time, we can intervene in the forex market, if there are excessive fluctuations, that's one time we intervene. And the second time is we intervene in the forex market to build up reserves. So essentially, we purchase forex from the market to bolster the official reserves that we have, and that process is going on. So if you look at the past 3 years, in 2023, we purchased 1.9 billion US dollars from the market. In 2024, we purchased 2.8 billion US dollars from the market, and thus far, this year we have purchased about 1.2 billion US dollars from the market. So we are building up reserves using the excess inflows that come to the forex market, but we do not try to change the direction of the exchange rate. We have allowed the exchange rate under the new Central Bank Act to respond to market conditions. That's the change.
That's a change in the framework.
Yes.
Then we'll come to reserves. What we saw was, even you mentioned at the beginning of the interview, now the reserves are above 6 billion. There's a conversation whether the People's Bank of China money can be considered reserves or not. Would you like to, what is like the technicality of it, and how should we see about it?
I might be fact-checked on this. But of course, I mean, when you look at the strict definition of reserves, official reserves, of course, I mean, the usability conditions of reserves, they have to be taken into account. The PBOC swap with the People's Bank of China, that has usability conditions, and so that is, of course, I mean, I understand that that has created some confusion. But when you look at the IMF reports also, you see that there is one line for usable reserves and there is another line for gross official reserves. Usable gross official reserves and gross official reserves, 2 lines. But as our reserve levels go up, very likely that we would meet the usability conditions of the PBOC swap as well. So because of that, when you look at those 2 lines, you see that from 2025, the numbers that are reported as usable reserves and official reserves, they are the same going forward. That's one aspect. The second aspect is that the IMF has included the PBOC swap of about 1.5 billion US dollars under Sri Lanka's public debt. So it's a liability of Sri Lanka. So if it's a liability of Sri Lanka, then it should be either reflected in expenditure somewhere or it should be in assets somewhere. So it is that PBOC swap which is recorded under the public debt of Sri Lanka that is reflected in under official reserves as well. So that's the
technicality of the reserves calculation. And also wanted to understand on the monetary policy communication, what we see is when the monetary board convenes, that they do a press release. And how do you basically communicate? Is there a communication guideline? Or how is the central bank or like the reserve banks in around the world thinks about it?
Okay.
And also there's also people question like, okay, whether the central bank should take an active role on more communicating these things.
Right.
So I would like to know the details of it.
Right. That's why I'm here.
That's why you're here. Yes.
So essentially, there is a process of internal communication when it comes to monetary policy. So there is a process within the central bank. There are several. We get data on a day-to-day basis. Some data is weekly, some monthly and quarterly, and so on. So our research department, economic research department, and the statistics department and the operational departments, they get together. They are members of the monetary policy committee. They get together from time to time. They have staff level meetings. There is a first staff level meeting, second staff level meeting. They look at the data, they look at projections, they look at the uncertainties, and they we have a quarterly projection model as well, what is called the forecasting and policy analysis system, that has near-term forecasts as well as medium-term forecasts. So we feed the data that we collect into those models. We come up with projections. We impose judgments on those. We take those discussions to a pre-MPC, pre-Monetary Policy Committee meeting. So at that meeting, we discuss them further with senior management of the central bank. Governor chairs that meeting. And that's followed by a Monetary Policy Committee meeting. That's an internal committee meeting, confidential, and we make recommendations to the Monetary Policy Board, which happens in so after the Monetary Policy Committee meeting, the Monetary Policy Board meeting happens after a couple of days. So we take our recommendation to the Monetary Policy Board, and the Monetary Policy Board members also discuss the recommendations and the economic conditions and decide on the appropriate monetary policy stance. As I said before, the monetary policy stance is reflected mainly by the policy interest rate. So the Monetary Policy Board, generally speaking, they will decide on the appropriate policy interest rate, whether to increase, whether to reduce, or whether to maintain at the same level, and so on.
So what we have to gather is, it's not like the Monetary Board comes over a tea or a coffee in an evening.
Definitely
and just okay, what are we going to do? 25 basis points up or down. It's not that it happens. There's a process which was driven by data and information, and after multiple reviews with the engagement of the central bank staff, that is where the final decision being made.
Absolutely. It's a very scientific process, Dhananath. So the decision is made, and the next day at 7:30 in the morning, there will be a press release. The decision of the Monetary Policy Board will be announced to the market. And on the same day, there will be a press conference where, again, Governor chairs the press conference, and Governor will explain to the market the reasons behind the Monetary Policy Board's decision and answer any question from the audience, I mean the media. So that's sort of the first level, first layer of monetary policy communication. But at the same time, our officers will go out and explain to the market in various fora why those decisions were made, the historical decisions, and what is the outlook for inflation, and so on. And if you look at the press releases, you would also see the fan chart, inflation fan chart, which is a new addition. And so that shows what our projections are, as well as the uncertainties surrounding the projections. And also, I mean, in recent times, we have tried to be more user-friendly in terms of monetary policy communication. That's why you see various other channels of monetary policy communication being used through social media and through comic flyers and so on. We are trying to simplify monetary policy communication, and so essentially, monetary policy decisions are something that affect the entire economy, so many people and businesses, and we want people to be aware of those.
Thank you very much. We are coming to the last two questions, or last two components of our conversation. We have been in conversation for nearly, I think, more than an hour now. Let's come to the money printing debate. There was a conversation about this modern monetary theory and whether central bank was following MMT. Of course, Advocate and me individually has commented on it, but as an independent program host, I would like to know what is MMT, and has it ever be the policy of the central bank even at one point, or were there any reasonable reasons, because some certain things that we may not see, which you may see, what is this conversation is about, and would you like to clarify on what's the stance of the central bank?
Can I ask from you what is MMT?
I'll give the opportunity to you since we have commented quite a lot on that.
So essentially, modern monetary theory, or MMT, is an idea. I don't even want to call it a theory. An idea that in a sovereign nation, central bank could print money and finance the government's deficits without any problem. But that's not a, I don't think that's a very valid argument, particularly for countries like ours. I'm sure it's not a valid argument for any country, but particularly for countries like ours, where our currency is not a reserve currency. And also when our debt problem is actually a foreign debt problem. These kind of arguments are not relevant to Sri Lanka. I can assure you that we've never had a proper discussion on modern monetary theory at the central bank, ever. I think what happened during the height of the crisis was that the government debt issue was always there, and all of a sudden, with the imprudent fiscal policy decisions that were taken at the end of 2019, particularly the reduction of tax rates, we lost market access. The sovereign ratings were downgraded, and then came COVID, and we lost market access. We lost access to international markets. We could not finance our external debt by raising money from external markets. And you know that domestically, the resources are limited. So if the government borrows domestically from outside the central bank, then of course, private sector will not have any funds to borrow from the market. Resources are limited. So what happened during this time, simply because there was no other avenues for the government to borrow, the government, as I discussed before, resorted to seeking finance from the central bank. So at one point in March 2020, the treasury bill holdings of the central bank were limited to 25 billion rupees, and it went up to, the lending to the government went up to more than 3 trillion rupees continuously. So that's a massive increase. And so essentially, I believe that this is what is meant by critics as modern monetary theory, but I assure you that there was no discussion on modern monetary theory within the central bank. There has been no discussion, and I haven't taken part in any of those discussions thus far.
Thank you, Dr. Amarasekaran, for clarifying that. My final round of questions is also on the vehicle imports, where people, sometimes there are news stories that our reserves are in challenge and we are importing from reserves. And recently there was this loan to value ratio revisions have been announced by the central bank. Could you elaborate? Actually, are we importing from reserves? What's the role of reserves in this importing business? Is there a role? And what is the recent changes for the loan to value ratio?
Sure. That's an interesting question, Dhananath. And there is this misunderstanding that the central bank has allocated this much for vehicle imports and we are getting to the end of it and so on. There is no such thing. So essentially, of course, we project from time to time, what it could be, because we generally project the current account outcome, the balance of payment outcome, and for key components of the current account and the balance of payments, we make projections from time to time. So at the beginning of the year, we thought that there will be vehicle imports of about $1 billion during 2025 once the market is opened up. But this is not a sort of a strict limit. And things are dynamic. So, I mean, if I give you an example, I think workers' remittances are doing much better than what they used to. We will see the latest workers' remittance numbers. It's $700 million in the month of July. So thus far, I mean, if you look at the numbers up to end June, I think we have seen vehicle imports of about $500 million actual imports, but LCs, of course, thus far about $1.2 billion worth of LCs have been opened, and this $500 million of vehicle imports, that's a part of those LCs opened. So you know that after opening LCs, there will be a lag. So it'll take about 2, 3, 4 months for an actual vehicle to come in. So we believe that vehicle imports this year, according to our latest projections, would be around 1.5 billion or less. So even with that much of vehicle imports, we are going to see a current account surplus this year. We are not going to see a major pressure on the current account or our reserve building efforts. So we have that comfort, and of course, I mean, we have seen current account surplus for the past 2 years and this year, but going forward, we are expecting a small current account deficit going forward at a manageable level. But this is not a major concern. So it's purely speculation that is out there on, the government or the central bank imposing restrictions on vehicle imports and so on. There is nothing like that. And governor has also clarified on that. I think even His Excellency the President has clarified that.
I think very quick question on a sideline question. Now, there's a sentiment. Okay, let's say we ban the imports of vehicles. So you mentioned it. The projection is about 1.2 billion or 1.5 billion. So if we ban, there's a perception that we will save that 1.5 billion because now we are not importing vehicles. So that saving has to be there, maybe coming from remittances and all that. And central bank absorb it as reserves. Is there any truth in it, or in terms of theory or in practicality, what happens? Is it a feasible option actually to build the reserves, so then actually we have better reserves, and maybe we can pay our foreign debt from that money? Is it a possibility?
Of course, reserve building is good. So, I mean, I believe that any country should have an appropriate level of reserves to ensure long-term sustainability of that economy. But doing that at the expense of imports, essential imports, might not be a very good idea. So, for example, if you look at the vehicle imports, I mean, you can probably limit it for a very short period of time, but that would also have repercussions on the economy, right? So the older vehicles would need spare parts and repairs and so on. Efficiency will go down, and we have a booming tourism industry, and that will be affected. And so many other things that are going on in the economy will be affected. So I think the best way for an economy to operate is keep many of those inflows and outflows free, and of course let the prices adjust.
Understood. Do you finally want to comment about the loan to value ratio?
Yes, I forgot that. So essentially, the central bank under the new act is the macroprudential authority of the country as well. What does that mean? So that means that we need to look after the overall health of the financial system as a whole. So in the past, the traditional role was bank supervision, non-bank supervision of non-bank institutions. We supervise and regulate the individual institutions to ensure that the individual institutions are sound, and through that maintain the stability of the financial system. So under macroprudential supervision, we look at the overall financial system as a whole and try to protect the financial system, maintain financial system stability. So under this new role, the Central Bank Act provides us several tools. So one is this loan-to-value ratio. So loan-to-value ratios could be there for motor vehicles, for housing, when you buy houses,
Right.
when you do pawning, and so on. So the loan-to-value ratios could be imposed on those. But anyway, even without central bank regulations, financial institutions have their own loan-to-value ratios. They are very prudent in lending. But so now, under the new Central Bank Act, the loan-to-value ratio is a tool, as a macroprudential tool. What we noticed is that in the past, this loan-to-value ratio and the powers of the central bank have been utilized to serve so many other purposes. For example, to promote electric vehicles. This loan-to-value ratio has been used. Before this change, the loan-to-value ratio on electric vehicles was set at 90%, higher rate. We all know that. I mean, almost immediately after you buy a new vehicle, whether it's electric or not, value goes down. So at that point, how can the financial institution that has given that particular loan recover if there is a default? So that was our concern. So another, if you take three-wheelers, you see that sometimes this loan-to-value ratio has been used to discourage three-wheelers, thinking that this is a social issue and so on. So what we have tried to do in the latest revision is that we've tried to come up to a sort of a middle ground, reach a middle ground. We are not there yet, but we've brought down the very high loan-to-value ratios, and we've increased the very low loan-to-value ratios that have been imposed by the central bank in the past. So that's the change that has happened recently.
Thank you very much, Dr. Amarsekar. I think we have covered quite a lot, starting from the monetary policy to the IMF program to the stability of the economy, inflation, and also on modern monetary theory and the role of the central bank on this process of stability. So thank you very much. We have covered quite a lot of terrain today. And you can subscribe us on Advocata Institute, and of course we are available on Sinhala as Advocata Plus, and in Tamil language we are available as Advocata Kural. And you can find us on any social media platform, including TikTok, LinkedIn, Instagram, Facebook, YouTube. We are available, and our mandate is to provide you the economic information so then you can make informed decisions which affects your future, at the same time to provide a direction to the policy making in Sri Lanka, so then all of us will be at a better position and our quality of living would be better. Dr. Amarsekara, thank you very much, and congratulations on your work on recovery, because from the images of at the height of the crisis when these talks were going at the IMF, you were at the table. I think by then it was the Minister Ali Sabri who was as the finance minister. So these are not easy times to work. Of course, as think tanks, as commenters, it's easy to comment from outside, but it's the man who is in the arena who faces all the challenges and everything, which we also understand. So congratulations on your work, and we wish you all the very best and your team to provide more and more impactful work.
Thank you very much, Chandranath. It was a pleasure having this conversation.
Thank you very much.